So in this video, we'll take a look at NVIDIA stock earnings projections or after earnings projections and what is possible. We'll look at the possibilities of what could happen here in NVIDIA. NVIDIA has become, you could say, a stock market on its own. I mean, the stock market itself has moved to some cases or in some days simply because of NVIDIA. So when we look at NVIDIA, it has in essence become a single-handed stock market. So this stock has ran up quite a bit, and as we take a look at it, looking at all the other players in the game, I mean, right now we're pulling back about 13 bucks on NVIDIA. We got AMD also pulling back some, Intel, and many others. So the market today is having a bit of a struggle day, but we've got earnings coming up, and that could fuel things for higher prices. So this is what we're kind of looking at. Now, there are some spotlights here like Tesla and PayPal and so on, but that could be, hey, any other company could do the same thing. But what I want you to wonder and look at earnings here is even with Walmart that had earnings here reported and then pulled back, you can see it a little bit better over here, where after earnings, we had a little bit of a pullback, even though the earnings looked okay, looked pretty good. The earnings were here, let me see if I could do it over here. 1.62 estimated versus 1.84. So they blew out and did really well on earnings, but the stock sold off. So what I want you to remember is that just because earnings sometimes are pushing that stock higher, or just because earnings come out and the earnings are good, it doesn't mean the stock will go higher. Sometimes that stock could go lower even if earnings are good, and that stock could actually go higher if earnings are bad. So in general, earnings, really what they are, they're pretty much a guessing game, and that's what you're going to end up doing. Now, if we take a look at just overall how this plays out, let's look at a standard distribution curve. So the way that it works is if you've got driving, we'll just take a driving example, of the speed limit being right here, 60 miles an hour. Think of this as like your stock price right now. Now you have some people going 70 miles an hour and you have some people going 50 miles an hour on the highway. So again, we've got between a 50 and a 70. So this is kind of one standard distribution curve right here, a one sigma move to the 50 to the 70. Now you have other people going even 80 or even 40. You know, maybe those oversized trucks carrying a house, they might be going like, 40, 45. I don't know. But this is what we've got. We've got a range, and this is a 2 standard deviation move. But what you could say is most people are contained between 40 and 80 miles an hour. Okay, so now we're getting into more and more of the data set. Now, there are some people going even 30 or even 90. Maybe late night, you might see a motorcycle guy popping a wheelie going 90 or 100 miles an hour. Or over here, 30 miles an hour. Somebody's like, just bad wheel. And then you got some really weird outliers where they might actually just be pulled over on the road, right? Out of like 1,000 cars or 500 cars you see, there's one pulled over. Or over here, you got some weird stuff happening. Maybe I don't know, somebody, there's a racing crew or something that you see once in a while. But the point being is that there's rare moments and things that happen. So, and with earnings, you just don't know how far that move can be. And what we can do is use this standard distribution curve to get a rough idea of where this stock can go. Now, right now we're down about 12 bucks, but the stock's at 456. So how do we get an estimate of how far this can move? Now, market maker moves around 49 points, but that only accounts for kind of that day. But if we're looking for the options and we're looking at the next couple of days, 3 days, we're actually looking for a move about 52 points. That's for a single standard distribution curve. So what does this really mean? Well, here's the way that this boils down. So this stock is, I'm going to say 450 right now, even though it's 456. Let's just say it's 450. So a one standard move is putting that stock up about $52 or down $52. So that's a plus or minus. So now we're looking for that stock to either pop to 500 or get to 400. That's a one standard move in the same way that we looked at, the driving example. So this is very similar. Then what we could actually look at is a 2 standard deviation move. Now we can get to 350 or 550. Whoa, you're saying 350? No way, not NVIDIA. And then what you could see is 300 to 600. So that's kind of encompasses most of the data points. So this stock in theory could go between 300 and 600. That's a wide range. And that's because the standard, the expected move is very high. There's a big range in that stock. It's a big stock. It's a big mama. So what we've got is really in most cases, or probably most of the time, 68% of the time, is going to be between a 400 and 500. It might even move just only 10 bucks, but between 400 and 500, we can expect that stock to move about 50 bucks up or down, 52 in this case for right now. So what you're looking at is those are the ranges, and you might think, hey, it can't really happen. Well, take a look at, boom, stocks like this that moved 34 points in a single day, which is down 25% almost. So when you look at DKS here, take a look. We moved a great deal. Now it's only expected to move four bucks. It's not a lot, but what I'm saying here is that when we look at something like this, and we let me see if I can pull it up. Think back. Okay, so let's go to on the 21st. And then we pull up DKS, and look, the expected move here on that earnings was only 8 bucks. It was only 8 bucks, but 8 times 3 standard deviation move was a 24-point move. And if you look at today's move, you are right near a 24, well, a little more than 24%, but more than that move. So it's a rare move, but it does happen. So my point being is when we look at NVIDIA here and we're starting to boil things down, that move could put that stock right around between 500 and 400. So that's what we've got. We've got an expected move between 4 and 500. If you really power higher, that could be, or lower, you got 450 and 350. So now you've got that next range could be up at this level. And is that really not likely? And you might think, you know, I'm bearish, and I'm not. I'm not bearish on the stock. I'm actually bullish on the stock. But it is possible, because look at what happened on the bullish side here. Okay, I'm just saying what is possible. What's possible is this stock could come back in here. And if it comes back to here, later on, it could actually sell off further to fill the gap. So what I'm saying is look at the possibilities of what could happen. These are kind of the two ranges. And at the end of the day, you could even get to 300, which, think about it, goes right into the bottom of that gap, or at the upper end around 600. So that's our range. I know it's big. I know it's huge. Most of the time, in many cases, you'll probably be just in one standard deviation move, which is between right now a 500 and a 400. In this case, you'll be kind of in that box zone of where that stock will go after earnings. But that also depends on what happens tomorrow. So anyways, that's what I wanted to share with you today, is how to kind of get a rough idea or projection on these kinds of things on NVIDIA. I've actually been in this one for a while, just in this paper trading account, and I also have it in my live account on the IRA and that kind of stuff. So it's a little bit, you know, different for me on those accounts. But this account, I have some just regular shares of stock, and just a ton of it, like, you know, 600 I bought way back in this price point, I don't know, 194 or something. So back at near close to when it was bottoming out, I was just buying in little bits of time and maybe selling some puts. But point being here is, you know, you just never know. And if you're getting into earnings, one of the ways to kind of reduce that position size is, well, just peel off, you know, 100 shares and pull off some of those, some of that position to get yourself less exposure on that position. I also have some puts here that I've got for insurance. You know, some puts that I've sold that we could probably close out right now or over the next day, simply because it's, you know, they're kind of maximizing their profitability. So why be in it during earnings and then get kind of assigned? So this is what you might do, is clean up some subtle positions on these during earnings, and just kind of get yourself settled with what's going on and what's happening and what's to come, because you just don't know what could be coming up. So anyways, thank you so much for joining me. Check out our website, tradersfly.com. There's a lot of great freebies, training material, mini courses and stuff over there. Highly encourage it, and that way you can continue to learn and evolve much more within options trading and everything else that you do in the marketplace. So thanks again for joining me. Truly appreciate it, and I will see you in the next video. Take care.